So first and foremost, DXY. So DXY has been on a tear. Let's do a quick little fundamental analysis for why this is. All right. So back when I got started trading, I traded Forex. And one of the key things that you learn when you're doing fundamental knowledge building about the Forex market was interest rates are what drive currency valuations relative to one another. So DXY is the dollar index. It's the index of the US dollar versus other world currencies. I have a nice little list right here of Forex, which is foreign exchange, and against everything, dollar CAD, especially the dollar yen. You may have read that the euro dollar is, wow, that really lost its peg around $1 here. $1 here was like a big psychological level. Hasn't got there for like 20 years. Basically, if you want to travel, your dollar, if you have US dollars, are going to be worth a lot more. You can have a very nice international vacation with your US dollars. And that's because the Fed is raising the interest rate on our currency, the US dollar, whereas other countries are keeping their interest rates depressed. And in the case of Japan, even, they are quantitative easing even more. And so that what that does is that makes it the dollar harder to borrow, costs more to borrow. That means it's harder to get. Demand is still high for the dollar, and the price goes up. Supply and demand being regulated by interest rates. Now, someone in the FOMC stream mentioned something about milkshake theory. It not only does it bring all the boys to the yard, but it also has to do with foreign exchange. So milkshake theory. It has to do, I think it comes from a reference from the movie There Will Be Blood, where the guy talks about drinking someone else's milkshake through a big long straw. I'm trying to find it here for you. See, milkshake theory, US dollar. The theory, coined by Brent Johnson, CEO of Santiago Capital, envisions a scenario where the US dollar sucks up the liquidity from other currencies and countries worldwide. The way that happens, I don't want to jump into this too deeply, but other currencies, to keep their currencies low relative to the dollar, to keep their exports attractive, because if their currency is too valuable, it means it hurts their exporting economy because it costs more for people to buy their goods. If our currency buys so much of their goods, then wait, that's not right. Well, keeping it simple, other currencies have to defend, and what it does is it means that because there's such a demand for dollars, other countries have to use more of their money to acquire dollars, which sucks the capital, sucks their currency out of their local economies into the US. And that's good for us in the short term, in the theory, but bad because eventually what you may have theoretically is a currency crisis somewhere in the world that has a cascade effect to the entire world. So again, it's FUD. I don't know if something bad is going to happen. This is above my pay grade, but that is the theory, milkshake theory, that as the dollar goes up, it is going to suck every other currency into the abyss of our economy. And that's maybe not good, but we shall see. All right. So the DXY, though, is a representation of the index of all of these together. And when is it going to stop? When is it going to have blow off top? Well, I'll say this. Whenever I see an instrument have a chart like this, I don't want to go long. It's been going up for a very long time. It could keep going up for a very long time. But at this point, the reward risk is not favorable to go long on something like this. Now, we can look in the past to look at some resistances to see what may happen. We got to look back quite a while. This is the monthly, so we got all the way back to a quarterly. And in 2000, 20 years ago, we had highs, a nice little resistance level back here around 117 on the DXY, which was the halfway point, and the DXY is what I've been encouraging people to do for a long time, which is start looking in the Forex market and start looking for some sort of like the dollar, or excuse me, the dollar yen, USDJPY, or the euro to start to invert. Now that's going to be reflected in the DXY, but the dollar yen this week, 22nd of September, yesterday, it looks like it has a little bit of a spike up here. Now this doesn't really. I'm noticing this right here with my eyes on the dollar yen. This is actually starting to spike out. In other words, you have this high on September the 22nd that poked its head above the range that was being established here and then closed back down. This is typically like a sell, a sign of reversal. Now, I bet the reason I'm not seeing it on my indicator is because of, what I typically want to do is I want to have a set ATR clearance. And I'm going to talk about this later in the stream. Let's see. I think we're losing YouTube again. Okay, that's YouTube's problem. Sorry, people on YouTube. TradingView is far, far superior. Is it dropping on TradingView too? Damn. Then it must be a TradingView problem. Starlink internet. Well, yeah, the ping wouldn't be that good. Let's see if we can get it to come back. Hold on. Okay, yeah, it dropped out there for a second. Yeah, I see it on TradingView right here. Yeah, it keeps going up and down on TradingView. Come on, TradingView. Let's go. Get the hamsters going. Okay. So this in isolation, this is the pattern that I like to look for. In other words, you have let me get my drawing out here, right here. You have a range of price here. Let's dig down to the 4 hour. Okay. A range of price. Basically, price catches itself in a little range. And then you have a spike up, and then it shoots back down. In other words, a bunch of people started buying this instrument up to here, only to be stopped out, and now they're back below the range. This is actually a good short signal. So, to your question, I'm glad that you brought that up. You asked me about the DXY, and my brain immediately went to, okay, DXY, really fucking bullish. Oops, should have said that. But we should look at the component parts of DXY for opportunity. And that's the same way I look at ETFs. Like, I'll look at a sector ETF of stocks, and it will give you a nice broad view of the sector itself. But looking at the component stocks are oftentimes where you're going to get that alpha, where you're going to get that really outsized opportunity. And as I look at this, I'm going to make a note of this. This is something worth watching. Little plug, I do stream this on Discord when I do. Check the link below. I don't charge for my Discord. I just want to hang out with people and share ideas and have good streaming quality. All right, so to wrap up, good we looked at the DXY because in it, by doing a little bit of mental work, looking at some of the component parts, I think we might have a trade in dollar yen. This is exactly like I said in the beginning, or Hugh Hendry started us off with. I don't know which way the dollar is going to go, but I know that if I were to enter a trade on the dollar yen, if I were to bet on the dollar going down relative to the yen, if I started the trade right now at 143, I know that I'll be wrong at 146. In other words, it would look a little something like this. Short it here and put a stop up here, and then we're going to look for a target. Typically what I'm going to do is look for, come back my risk reward. There we go. Let's see, visibility, put this on the days and the weeks because it's going to take a while. Yes. And I would look for, what I typically like to do is this last leg, 50%, but that's not going to give you very much movement. The big move down over a long period of time would be something like this, down to 127. So if I was a macro Forex trader, I would want to set up a trade that looks something like this, where because we had that spike up, we know where our stop needs to be, we know where our risk needs to be. We can short it here, and then we're going to take it back down to the 128. In other words, a bit of mean reversion for this huge trend that happened. This thing could take a while to happen. If it took about this long to happen, all the way down to here, then it could take also about 115 days to come down here. So yeah, this would be something I would look for maybe to start next week. I mean, we may be at an inversion point. Every week may be the inversion point, especially as we get into October. We're about to get into quarter four. This year is almost over. Wow. This has been one of the fastest years I think ever. Maybe it's because I'm getting older.